Alright, so this is my video presentation for the thesis, which is titled as Integrating Battery Energy Storage Systems for Wind Power Imbalance Management and Market Participation in Nordics. My name is Saku Snab, and the supervisor for this thesis have been Sanna Syri from Aalto University and advisor Ilari Alaperä from Fortum. So this thesis investigates the potential of a co-located BESS, so a battery energy storage system, operating simultaneously in imbalance management and multi-market optimization. The objective was to evaluate the profitability, how imbalance management affects the profitability of a BESS investment. And additionally, this thesis gives insights on how capacity is allocated in different markets. And then also it evaluates is imbalance management alone profitable without market participation. So the agenda you can see here. I'll start with short background on why this topic is important, and then I will have a short crash course in Nordic markets. Then I'll present the methodology and the simulation I have developed for this thesis, and then I will show you the results, and finally ending with a conclusion. So starting with the background, Nordic countries have been attracting large electricity consuming facilities such as data centers, green hydrogen, and electrification of heavy industry. And this is mainly due to cheap and emission-free electricity. Because consumption is forecasted to increase, so must generation, which is mainly through new wind power. And because wind power is intermittent and somewhat unpredictable, this creates challenges in the power systems, mainly in balancing and reliability. And additionally, an increased share of wind power increases imbalance costs for the wind power plant operators. Flexible balancing is needed, and BESS have proved to be the most promising technology for mitigating these challenges. And BESS integrated with a wind power plant can be used in many applications, but this thesis investigates only market participation, energy arbitrage, and imbalance management. And the reserve markets have been in recent years proved to be the most valuable application for BESS, but little study has been made on the value of imbalance management. And this figure illustrates energy arbitrage. So simple thing that you buy electricity at cheap prices and sell it at higher prices. And this figure shows you imbalance management. The red curve is the imbalance volumes for a wind power plant without corrections of a battery. And then the blue curve shows you the remaining imbalance volumes after you have corrected them with a battery. So with a battery, you can reduce these imbalance volumes. Then a short crash course in the Nordic markets. So the primary market for electricity trading is the day-ahead market, where you do bids on a previous day of delivery. Then you have the intraday market, which allows trading more closer to the delivery period. And both day-ahead and intraday bids are based on forecasts, and therefore real generation and these forecasts may differ, and this leads to system imbalances, which then deviates grid frequency. And to mitigate grid frequency, the transmission system operators manage reserve and balancing markets, including FCRD and FCRN markets, as well as AFRR and MFRR markets. And also there's the FFR markets, but this thesis doesn't consider that. So this image shows you how the reserves are activated when a frequency deviation occurs. So when the frequency deviates, the first product to activate is the FCR products. And after that, you have the AFRR product, which releases FCR products and restores frequency. After this, you have the MFRR product, which frees both FCR and AFRR products and restores then the frequency to 50 Hz. And about imbalance management, the generation and consumption in the system must be at all times in balance. And imbalances then arise when forecasted or planned production or consumption and the realized production or consumption differs from each other. And the physical balancing is achieved through the reserve and balancing markets, which I explained, but imbalance settlement achieves financial balancing, where the operator who has created these imbalances are financially responsible of those, creating then imbalance cost for the operators. Moving on then to the methodology. So I developed a simulation where I did 24 different scenario simulations, where I changed the battery capacity, energy capacity, and then the fixed capacity share reserved for imbalance management, and then for different bidding zones. So the simulation includes a 20 megawatt hour and 40 megawatt hour batteries. The simulations were made for 4 different shares of fixed capacity reserved for imbalance management: 0, 30, 70, and 100%. And for example, the 30% means that of BESS capacity, 30% is fixed only for imbalance management, and the remaining 70% is only for market participation. And all these scenarios were then simulated for the Finnish bidding zone as well as SE2 and NO4. The markets I have included in the simulations are the day-ahead market, continuous intraday market, hourly FCRD and FCRN markets, and AFRR and MFRR capacity markets and energy activation markets. And input for these markets are market prices, procured volumes, and activated volumes. And to simulate BESS in imbalance management, I have utilized hourly imbalance volume data for Kaalax, Suulväli, and Sorfjord wind power plants in their corresponding bidding zones. And in addition to these prices and volumes, I have included transmission fees, imbalance fees, and energy payments. And all this data are based on 2024 data. So in the simulation, I have considered the following for a lithium-ion battery: 10 megawatt power rating and 20 megawatt hour and 40 megawatt hour energy capacities. I have modeled an hourly level of state of charge with 5% and 95% state of charge limits. A state of charge indicates to the energy content at a specific hour in ratio to its maximum energy capacity. I have modeled both calendar and cyclic degradation, and end of life state of health is at 70%, meaning how much the battery can degrade before reaching its end of life. And cycle life, so how many cycles it can do before reaching its end of life, is at 7,000 cycles. Round trip efficiency 91%, and capital expenditures 220 or 240 euros per kilowatt hour depending on the energy capacity, and then operating and maintenance costs 6 euros per kilowatt hour. And then finally, some key things about the simulation. So the simulation runs until the 70% state of health is reached, and it uses 2024 data in a repeated manner. And the battery interacts with the wind power plant only when it can mitigate or reduce imbalance costs. Otherwise, it charges from markets and discharges to markets. And the simulation has perfect foresight, which means that it knows exactly the coming prices and volumes, and therefore knows how to exactly or perfectly allocate its capacity. And Therefore, the profitability of these results indicates the maximum available value you can get. Then moving on to results, we have 3 different categories for results. Operational, including state of charge levels and degradation and lifetime. Then we have the economics, including net cash flows and net present value. And then the third one of imbalance correction, so how imbalance costs can be reduced. So starting with the state of charge levels, this shows you for the 40 megawatt hour battery without imbalance management, so only market participation. And this is for a 1 week period. Then we add the state of charge for a battery with the same size, but now with only imbalance management, so no market participation. And as can be seen, imbalance management have larger activated volumes, but less frequent activations. And also the state of charge limits are reached more often with only imbalance management. So the less activations you have, the less cycles you have. The less cycles you have, less degradation you have, and which then extends the lifetime of your battery. This figure represents the energy capacity degradation of each scenario in Finland, and the darker the color is, the more capacity is reserved for imbalance management. And as can be seen, the more capacity is for imbalance management, the less degradation you have and the longer lifetimes you get. For example, this line here is for the 40 megawatt hour battery with 100% reserved for imbalance management. It shows an operational lifetime of 13 years. And all scenarios results lifetimes of 7.5 to 13 years. And the results for NO4 and SE2 are very similar to those of Finland. Then for the cash flows in specific markets, so this figure shows market-specific cash flows for Finland for different scenarios for the 40 megawatt hour systems. And again, the darker the color is, the more capacity you have reserved for imbalance management. And let's now concentrate on the overall picture and not specific markets. And also concentrate on the leftmost column, which indicates imbalance cost savings with imbalance management. So in Finland, we have quite diversified the cash flow in markets, especially in FCRD and FCRN markets. And when we look at imbalance management and its cost savings, it really has a high value in comparison to markets. And then this is for SE2. It shows much less diversification and more concentration on FCRD and FCRN markets. And also when we look at value of imbalance management, it shows much less value than Finland. And for NO4, we see that the overall value is much less, and also the distribution of value is less, more concentrated in FCRN and AFRR capacity markets. And again, imbalance management has quite low value. And recapping these, we have now Finland, then we have SE2 and NO4. And the scale on the y-axis is the same. So when we look at Finland, it's much more evenly distributed, the value, compared to SE2 and NO4. And when we look at the leftmost column for imbalance cost savings, Finland shows the greatest savings compared to SE2 and NO4. Then moving on to net present value analysis. So on x-axis you have now the fixed capacity share reserved for imbalance management, and on y-axis you have the net present value in millions of euros. So this shows you the results for the scenarios in Finland. And it's evident that increasing the capacity share reserved for imbalance management decreases your net present value, meaning the more capacity you have for market participation, the better profitability you get. And the same for Sweden can be seen here, just a little less value than for Finland. And then for NO4, much less value, much less net present value. And we can see that for Norway, the 0% scenario and 30% scenario are the only ones for NO4, which results in positive net present values. So answering the question, research question on how much fixed capacity should be reserved for imbalance management, this gives the results that no fixed capacity for imbalance management and all capacity for market participation. And then how much, the secondary question of is only imbalance management profitable, this gives the results that no, it's not, because then all scenarios net present values are negative. Then the last thing is the imbalance costs, and this shows you for Karlax wind power plant the imbalance costs in 2024. And now we can reduce these costs by adding a battery system, and you can see the remaining imbalance costs after corrections in the red lines. And this is for the 40 megawatt hour system with 70% capacity share reserved for imbalance management. Then if we add the same battery size, but now we have only imbalance management with that, it can reduce the costs even more. And it can be seen that the imbalance management is most impactful at hours where costs are really high and less significant at low cost hours. So as a conclusion of my studies, the more fixed capacity you have reserved for imbalance management, the more it can reduce imbalance costs, but the overall profitability decreases. And markets remains more attractive than imbalance management. And then Finland showed much more value in imbalance management compared to SC2 and NO4, mainly due to higher imbalance prices. And in all scenarios, relying only on imbalance management resulted in non-profitable investments. So that's it for my presentation. Thanks.